Hi there, this is Simon from Finance and Coffee here as part of the Perspective series. I'm here with Brett Thiedeman from Thiedeman Insurance Solutions. Going to be talking a little bit today about a little bit of background on the insurance, the industry generally, a little bit on what Brett's offering is, and a little bit of detail on some services and that sort of thing. So yeah, welcome Brett. Thanks for coming in.
Cheers, Simon.
No worries. Do you want to give us a little bit of a background of your business?
Yeah, so the business started in 2016, so end of 2016. I had sort of worked in 17 years in the insurance industry and decided that it was time to start my own business. So I went out at the end of 2016 and started my own insurance business.
Very cool. Talk to us a little bit about the different services that you offer.
So I guess the main product is professional indemnity.
Yep.
So whether it be for mortgage brokers or real estate agents or management consultants,
yep,
that seems to be the one that I've done the most of in the couple of years that I've started the business. Other than that, business insurance is probably the next one,
cool.
And then house insurance and car insurance and landlord's insurance as well.
Okay. And do you want to go into a little bit more detail on maybe the professional indemnity side of things? Sort of how does that work? Why would you have it? That sort of thing?
Yeah, no worries. Yeah. So I guess from a mortgage broker's perspective, the professional indemnity policy, is basically covering the advice that that you as a mortgage broker that you're giving to your clients.
Yep.
The other thing as well is the documents that you're completing. So
yep,
making sure that you're completing the documents and you're understanding the requirements of the individual clients as well. I guess in the event that where those aren't completed properly or you're giving false advice, that's where I guess a professional indemnity policy sort of kicks in to cover you against any legal costs
yep,
that are brought about you, and then the indemnity for what you might have to pay that client as well.
And an adjunct to that would be something like public liability insurance as well. Yeah.
Yeah. So public liability, obviously, much less of an exposure
yep,
for mortgage brokers.
You would hope, anyway.
Yeah. So basically, the public liability policy is covering, mortgage brokers, that might be going out to do a client visit.
Yep.
You might be, sitting down with one of the clients, and you might be having a coffee, and you might drop your coffee, and it might slip over the laptop, or you might have a client coming into your office, and you might have some water on the ground, and the client might slip over on that. So basically, that's what the liability is covering. Yeah,
so a lot of brokers also, obviously, from a business perspective, getting more and more into the digital space. A lot more in the way of obviously data capture and that kind of thing on their clients now. And that obviously opens people up a lot to sort of probably more in the way of sort of cyber liability than maybe they had in the past.
Yeah.
So maybe talk to us about that as a product as well.
Yeah, absolutely. So the cyber liability is, I guess, the newest type of insurance.
And why would they need that kind of insurance?
Well, so I guess a few reasons. I guess if you think about the data and information that mortgage brokers are keeping on their clients, yep, if someone was to get in and to be able to hack in and get that information, I guess that mortgage broker is then being exposed, because then the hackers can go and use that information to do whatever they do.
Yeah.
Yeah.
And what kind of things might they be able to do with that sort of thing? It's things like identity theft and stuff like that.
Yeah, absolutely. Identity theft. And, because as I said, with the information, like a lot of personal information, might be banking details, personal yep, information, Centrelink details.
Yep.
And as you said, they can use that for, mainly in that respect, it's for that identity theft, pretending they're someone, that they're not. I guess the other aspects of the cyber liability, so I guess there's a few things that it covers. So I guess the three main parts of a cyber liability policy is first party liability.
Yep.
So with that, so that might be an instance where the mortgage broker, someone might access or send them a ransomware, and they might request, they pay them $25,000 in Bitcoin.
Yep.
For them to unlock their computer again.
Yeah.
So there's been examples of that in all different types of industries. So that's the first party liability. The next part is the third party liability, and that's where that identity theft comes into it. So we're holding, as a mortgage broker, you're holding that information, personal information for clients, and so that can be taken. So that's where the third party liability comes in.
Yep.
And the next part is the business interruption as well. So, as mortgage brokers, if any of these things are disrupting the business and you're not able to earn an income, well, then the cyber liability policy then will cover you for the loss of income, whilst the computer systems or whatever it is up and running again, so you can get back to doing business.
And is it a separate policy, or does it kick into some of the other services that you do?
Yeah, good question, Simon. Absolutely a separate policy.
Right.
Yeah, so there's no cover under a professional indemnity policy for any cyber liability. So that's where a lot of people think that there might be, and we do get questions from time to time saying, aren't we covered under a liability policy or a professional indemnity policy for these kinds of cyber liability? So it's definitely a good question, and it's as I said, it's a separate policy.
Yeah. Okay. Good. Good to know. And it is these kind of conversations come up fairly regularly on Finance and Coffee, and we had one in the last couple of days where someone had clicked an email when they shouldn't have, and potentially exposed themselves to a ransomware attack. So it is actually worth kind of keeping that kind of thing in mind, and being really aware of the fact that you're not actually covered under a normal professional indemnity policy for that sort of thing. Yeah.
And there's a lot of that happening. There was a time where the Bitcoin and the ransomware was more of a thing. Yeah. But what I've seen in probably the last 12 months is the what they call social engineering, or the fraudulent emails and invoices as well. So that's a big one. I've actually had a client in the last couple of weeks who that happened to, where they've paid an invoice, and it was basically $100,000. Wow. And they've paid that money, and then realised that it wasn't over. They realised a day later, so they did it on a Friday. Yep. And by the Monday they realised it, but it was too late. Yeah. The money's been transferred to Hong Kong or something like that, and interesting. So that's probably a big one just to be aware of. If I could, I guess that's the advice that I'd give to the mortgage brokers who are listening, is that be really careful about those emails, because they look real. Yeah, absolutely. And I guess just another thing probably to mention is with those kind of payments where you're getting an invoice, like if for example, it's like $5,000 or $10,000. So I think businesses probably need to speak to each other and make sure that there's probably two people that are authorising that payment. Yeah. Because that's a big thing as well, and that's more from a risk management point of view. Perspective. Yeah. Absolutely. Yeah. Rather than need to do with the actual insurance policy, just as a risk management process that businesses should sort of get through their head. Yeah, definitely.
So just, talking about sort of policies in a little bit more detail then, a few sort of small questions from me here. So can you talk about limits? Maybe just give me a bit of a view of, what a limit is and what an aggregate limit is.
So the limit, generally, mortgage brokers will have sort of a minimum of $2 million. Yeah. Which is per claim, and then depending on, there's various different policies. Some policies will be a maximum of $2 million per claim. Yep. And then on top of that, there'll be like a $2 million in the aggregate, which means in that policy period.
For the total, yeah. And well. As a broker, how would you sort of determine what kind of level of cover you might require?
Yeah, it's a good question as well, and it's probably not an easy one to answer, because
Sit down with you and talk about it.
Yeah,
Yeah.
and that's true, and it's probably to talk to other mortgage brokers as well, and with mortgage brokers you're generally sort of guided as well. I think there's a minimum of $2 million limit.
Yeah, I mean, from what I've seen in the past, I think 2 million is a fairly good sort of base limit for a lot of businesses, like mortgage broking businesses.
Yeah, that's right. Yeah, and some businesses, some larger ones have 5 million. So like I've got some that bigger businesses that require 5 mil as well. But I guess it all depends on. I guess the easiest way to do it is probably to look at your largest clients or your largest client or largest clients, and so if you think that that $2 million is not going to cut it, then you probably need to up that limit.
Yeah, and from a risk perspective as well, I assume it also depends on whether you're doing a lot of commercial and that sort of thing too.
Absolutely, yeah. And that's where it sort of pays to talk to someone. Yeah, absolutely, because it'll all depend on exactly as you said. If you're doing the commercial lending, and you might be doing other parts to that business as well. And that's where it's important to talk to someone to make sure that those types of things are covered within the policy as well, because you don't want to get to the stage where you have a claim, and so the insurance broker or the insurance company will turn around and say, "Oh, listen, sorry, you're not covered for that." So that's what's really important. If you're doing commercial lending or other aspects of it, you might be doing wills, and that you just make sure that those things are covered.
Yeah, absolutely.
In the policy as well.
Yeah. And look, I mean, probably the last question I have for you is just as far as kind of policies, what's the difference between a group and an individual policy?
Yeah, so again with that, it's probably for those reasons we just mentioned, Simon. Like the group policy, might not cover every aspect of it.
Yeah.
So that's where it's really important to talk to someone.
You're really just talking about what the right policy is.
Talk to an insurance broker, and seek some advice.
Excellent. Very good.
About that, because as I said, that some of the group policies they cover just residential lending. So if you're doing different aspects to it, it's important that you get your policy tailored for your business.
Very good. Okay. Thanks very much for coming in today, Brett. It's been great talking to you. Thanks a lot.
Thank you.
Cheers. Thanks everyone. Thanks for watching.
Thanks.